Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, May 21st, 2007, and let's take a look at the markets. The Nasdaq 100 did break out of that range. We saw a 30-cent gain in the Qs here today, and you can see that everyone has been belly aching about how technology's dead and that sort of thing. Hopefully they were short and got run over, and those were the people that helped push this market out to a new high. Because new highs in the Nasdaq look like they ought to continue. The market had a nice pause in here for the last 3 weeks or so, and now with new highs, it looks like the buyers are once again back in control. Taking a look at the 10-minute time frame, you see we did have a little bit deeper of a pullback than I would have hoped to see late in the day, but that actually is probably good for if you're not involved. It's good for a lower risk entry, that is maybe tomorrow. So we've got this rising 5-day moving average, which started turning higher on Friday, and that gave us the not really the conviction, but the reason to think that the buyers were back in control. That plus the higher highs and higher lows that I'm outlining right now. The little resistance level that I thought that was in existence was 46.60, and I'm sorry, that wouldn't have been 46.60. But it broke past that 46.60 level on Friday, was the level I was talking about. And today, we did get back up above that 47 level. It came down and probed in there, but closed just above it. So this Nasdaq looks like it's in great shape right now, and no reason to think that it can't continue higher. The S&P 500 did finish with a gain, but only 3 cents, and it was higher during the day. We saw that late in the day there was a little bit of selling that came into the market. Nothing to be concerned about. Again, we've got the rising 5-day moving average here. We've got all these other moving averages, advancing. On Friday, I thought that, or I said that a lot of times the Monday after expiration, we do tend to see a reversal of whatever that prior trend was. That didn't occur today. Maybe it's going to happen, but the trend still is clearly higher here. And if you're selling short based on a strategy of what might typically happen or has happened in the past, that's not really a strategy for entering the market. It's more of an intellectual curiosity, I like to think of it as. But as long as we're looking at the trend, that's what pays us, not what happened 9 out of the last 38 expirations or whatever statistic you want to come up with. That, to me, the quantitative analysis can provide an edge, but it's not a trading strategy. You have to look at what's the primary trend, where's your low risk entry, and that sort of thing, and then put it all together and come up with a plan. People try too hard to make trading scientific. They do it with stochastics, with MACD. They try and do it with quantitative analysis. And those are all good tools for providing a short little bit of an edge, but the only thing that pays is price, and that's what we have to look at. And price action continues to be bullish here. We continue to see higher highs in the market, and the one thing was that we had a new high in the S&P 500. A lot of times the new high, especially after a market that's as extended as this one, is met with selling because institutions who've been riding this higher have now seen an opportunity where the public is starting to get excited, and they figure, hey, sell it out to the public right in here. I rarely listen to the to CNBC, but today I heard some announcers saying, well, now that the S&P 500 is breaking out to new highs, that's going to be good for the market because that's what the institutions pay attention to. The institutions are the ones that pushed it out to a new high. So just a little tangent, but that made no sense to me. Semiconductors still remain bullish, but it was disappointing to see the extent of the failure in this market today. I was thinking that a move above what level? I think the 37.40 would put the buyers back in control, and it appeared to be that way. But we did have a declining 5-day moving average. So in that short term, I think that the trend was still lower, and hopefully if you got involved at that 37.40, that after a 20+ cent rally that you had raised your stop to break even or so and avoided this sell-off later in the day. Now it looks like this market's going to need some more consolidation, and this 5-day moving average is going to have to turn sideways before it can rally once again. But that was a disappointment to see that what was appearing intraday to be an area of leadership did fail so hard late in the day here. So that's just one thing to keep your eye on. and maybe that means we're going to see a little bit of a pullback. I don't know. I don't want to read too much into it. It's just one group in a very large market, but it is an important group. The Russell 2000, the IWM, which said that looks like the range is up to about $83 in here, and we saw that market rally right up to that level and get turned back away from it, but not as hard as we saw in the semiconductors, and in fact even in the Qs. Here we see that the buyers are clearly back in control with a rising 5-day moving average. It rallied up to the top end of that range and then pulled back slightly, but the Russell 2000 continues to look very bullish to me. No reason to think that this market won't be breaking out and hold on to those gains in the next few days or so. Let's take a look at the stocks that I had mentioned over the weekend. ACTU, Actuate, the suggestion was to buy the stock above $6.34, so that occurred right in here. Now I'm going to say let's put that stop from 618 now to break even in ACTU. Big mover today was this AMSC, this American Superconductor, and unfortunately I'm not going to call it an official entry because I said buy above 1505, but I didn't mean buy at 1545. The stock ran higher. It broke out to multi-year highs, and as I pointed out, was 6 million shares short. Those guys had a really tough day, and that's the beauty of finding these stocks when they break out, and then there's that big short position. Then they were on CNBC later in the day too, and got this other boost. But stock is clearly breaking out, looks great. If you're in it, I would say figure out on your own where to put the stop because it's far exceeded the expectations of what I thought it would have done today. And if you did trade it and make some money, good job. Finisar, FNSR, I had suggested buying this one above 374. So you should be in this one at 375. The original stop I had suggested was $3.65. Let's raise that stop up to about 373. That'll give us a theoretical risk of about 2 cents a share in Finisar. And then we had TASER. I had suggested in this one buying the stock above $9.32. That occurred right in here. Stock hasn't really done anything yet. It still looks bullish. I would say at this point our stop was going to be at $9.13 a share. Let's raise that up to $9.20 right now, and that'll put our theoretical risk right now at about 13 cents a share. The stock that I'd suggested looking for as potential a short sale was this WFR, and that had a nice day on the short side, but it wasn't an official recommendation, so I'm not going to update further in that one.